in back taxes, according to a government report. So let's get into the story. So Republicans say a new nonpartisan report indicates President Joe Biden improperly avoided paying Medicare taxes before he took office, raising eyebrows in the possibility that he owes the IRS as much as $500,000 in back taxes. So Biden is leading a Democratic push for a $3.5 trillion bill to subsidize childcare, education, and healthcare by targeting tax avoidance and raising tax rates on higher incomes so the rich pay their fair share. A House Ways and Means Committee draft of the bill would end the accounting trick apparently exploited by Biden and boost IRS funding for audits. But the new report, drafted by the Congressional Research Service and provided to the Post, suggests Biden owes taxes under current rules, according to the congressman who requested it. So Joe Biden wants to raise taxes by $2.1 trillion while claiming the rich need to pay their fair share, but in 2017, multi-millionaire Joe Biden skirted his payroll taxes, the very taxes that fund Medicare and Obamacare, said Rep. Jim Banks, chairman of the Conservative Republican Study Committee. So according to the criteria CRS provided to my office, he owes the IRS and the American people hundreds of thousands of dollars in back taxes, Banks said. Every American should know about Joe Biden's tax hypocrisy. So Banks said the report shows Biden improperly used S corporations to avoid paying Medicare tax on speaking fees and book sales in 2017 and 2018. And Biden First Lady Jill Biden routed more than $13 million through S corporations and counted less than $800,000 of it as salary eligible for the Medicare tax, exempting the rest from what would have been a 3.8% rate, the Wall Street Journal reported. Now, the CRS report doesn't name Biden, but analyzes cases in which the IRS wanted judgment against taxpayers who paid themselves suspiciously low salaries from S corporations and counted most of the revenue as distributions exempt from the Medicare tax. So courts have agreed with the IRS that shareholder employees are subject to employment taxes when shareholders take distributions, dividends, or other forms of compensation in lieu of reasonable compensation, the report says. The document outlines several examples, including a case involving an accountant named David Watson, who piped about $200,000 per year of his firm's revenue through an S corporation, while deeming just $24,000 of it as taxable salary, and courts determined he dramatically underpaid his taxes. And significantly, the CRS report notes that the presidential tax returns are subject to automatic audit only for years when a president is in office. So the White House said this year that the Biden S corporations are dormant, meaning the IRS won't automatically review their use. So Biden, who branded himself middle-class Joe, routinely argues the rich must pay their fair share. So Chris Jacobs, a veteran of GOP offices on Capitol Hill who closely tracks the issue, said Joe Biden wants to expand the IRS funding and authority so they can audit more Americans. Given that the Liberal Tax Policy Center and the Nonpartisan Congressional Research Service both have raised questions about the way Biden handled his taxes, why doesn't he ask for his own taxes to get audited first? Jacobs added, Biden doesn't really believe in expanding programs like Medicare and Obamacare because he thought buying a second multi-million-dollar mansion and renting a third was more important than helping to fund those laws. The $3.5 trillion social spending bill that Biden hopes to ram through Congress with only Democratic votes would end the tactic used by Biden. If it passes as drafted by the House Ways and Means Committee, it also would increase IRS funding by $80 billion over 10 years to crack down on tax avoidance. Tax law experts told the Post that the CRS report underscores the long-standing controversy, but that it doesn't necessarily break new ground. They say the IRS simply doesn't have the resources to make sure that all S corporations reasonably assess what counts as salary. So corporate tax expert Bob Willens, an adjunct professor at Columbia University's Business School, says that each case is unique and that the question remains whether the compensation extracted from his corporation was reasonable. Willens said that, in my view, the case can easily be made that reasonable compensation should be multiples of $300,000. Whether the IRS would be willing to make that case, however, is questionable given the identity of the shareholder. John Bogdansky, a former member of the IRS Commissioner's Advisory Group and a professor at Lewis and Clark Law School, notes that political debate over the use of S corporations has raged for decades, impacting other prominent politicians such as 2004 Democratic vice presidential nominee Senator John Edwards and former Republican House Speaker Newt Gingrich. Bogdansky says Biden would not have to pay Medicare taxes for the share of income made off the labor of other people, which can be complicated to determine. He says wealthy people generally make assumptions in their own favor and get away with it. So there are millions, literally millions of S corporations, so there might be 500,000 S corporations that are playing this game, and the IRS doesn't have anywhere near enough of a budget to bring 500,000 cases every year, he said. But Bogdansky added that he thinks it's quite rich for Republicans to focus on Biden's taxes when former President Donald Trump never released his own tax returns, repeatedly saying they were under audit. David Gimmage, a tax law professor at Indiana University Bloomington, said the general view among tax experts is that it's quite easy for taxpayers to get away with this form of tax planning to the point of it being very abusive. This is not the sort of tax planning that should be going on as a matter of tax policy, but it's very hard for the IRS to police, Gimmage said. I would hope that increased attention to this issue, whether that be through focus on a President Biden using this form of tax planning or more generally would increase the case for reform. I think the case for both increased IRS funding and for substantive law reform this area is overwhelmingly strong, Gimmage said. The White House did not immediately respond to a request for comment, and the Biden campaign previously said that the salaries earned by the Bidens are reasonable and were determined in good faith. Now, the thing is, with like any politician, right? You always got to look at it like this. Did they make their millions before going into politics or after going into politics? And that's the problem that I kind of have with like Joe Biden, like specifically, is that he's made the majority of his money after going into politics. Like basically after he became vice president, right? Because I believe he, like his net worth was like, I think like less than $500,000 before becoming vice president. And then literally right after he became vice president, it went up to like 13 million or 20 million something, like something crazy. And that's something to really like think about it, right? Like I would prefer someone who is already rich before going into politics, just because there's less of a chance that you're going to be bought off by some sort of outside party or outside influence. Now that's like a personal opinion, but it's just like a thing. It's basically like, okay, that's one less factor that you got to necessarily worry about for someone, right? Because if they already have their money, what is more money going to do for them, right? So in my mind, I think it's going to have like less of a influential impact, right? Because like if you're already a multi-millionaire, are you going to care about another $1 million if someone just were to offer that to you? Probably not really. Like if you are managing your money correctly, if you have no debt, if you have an emergency fund, and if you have your money invested correctly and is being automatically invested, and you have this money before going into politics, then another like $1 million or $10 million shouldn't really have any impact on you because it doesn't change your life at all, right? But if you are someone whose net worth only has like $500,000 and you can basically completely change your life by taking this extra money from speaking engagements and like quotations, right? I feel like that is a heavy thing to deal with, right? Like there's like a very obvious sign that most likely something shady is going on there, right? So, I mean, just think about it, right? Like for speaking engagements specifically, right? Why would a company pay $500,000, $1 million for like an hour for someone to speak at their place, right? While also typically all these companies that are offering to pay these types of payments are companies that directly benefited from policy decisions from these politicians. Like if you look at any, and I mean any politician that has made millions of dollars from speaking engagements, you will notice a trend that all these companies that are paying them buttloads of money are companies that directly benefited from their policy decisions or some of their backing from the specific politician. Like it may not be necessarily like a 1-to-1 ratio in the sense that like it's not like an obvious like support of the politician to that company, but in some way that politician helped that company in some way. Okay? And that's the thing that I always find so dirty about it. Right? But if you need help with getting out of debt, go to 40inbox.com. Feel free to give your thoughts about this whole situation.